Mayor Mamdani wants to freeze rents and end homeless sweeps. But the bankruptcy of a major landlord and a $20 billion budget hole suggests his math just doesn't add up.
It really is a classic case of ideology colliding head-on with economic reality. And right now, reality is winning.
Welcome back to the Deep Dive. Today, we're looking at the big picture of New York City housing. And frankly, the picture is pretty ugly.
It really is.
I've got a stack of sources here, articles, budget reports, interviews, and they all seem to point to one conclusion. The system is breaking.
It is breaking, and it's not just in one place. It's a structural failure, you know? You have buildings physically crumbling, a city budget spiraling, and a situation on the streets that residents are saying is becoming dangerous.
And right in the middle of it all is the new mayor, Zohran Mamdani. He's got these very bold ideas. He talks a lot about housing as a human right.
Which sounds great, of course.
It sounds great. But our mission today is to look past the slogans and, well, look at the numbers. Because the one thing that kept coming up in these sources is that the math simply isn't working.
Exactly. We're going to look at the fuzzy math behind the agenda.
Oh.
Because you can have the best intentions in the world, but if the numbers don't balance, the city goes broke.
So let's start with a news story that just broke. It feels like a perfect warning sign of what we're dealing with. The Pinnacle Group.
This is a huge story. Pinnacle is a major landlord. We're talking 5,100 apartments.
And these aren't luxury high-rises.
No, not at all. These are rent-stabilized units in the Bronx and Upper Manhattan. This is the core of the city's affordable housing.
And the news is a federal judge just approved basically a fire sale of these buildings, sold for $451 million.
Which, you know, sounds like a lot of money, but it's a catastrophe.
A catastrophe how?
Because back in 2021, that same portfolio was valued nearly 45% higher. Imagine your house being worth half of what you paid just 3 years ago.
So what happened? How does value just disappear like that?
It's simple arithmetic, really. The value is based on profit. And on one side, you have cost insurance premiums up 57%, property taxes up 12%.
Okay, so the cost of running the buildings just skyrocketed.
Exactly. But these are rent-stabilized apartments. The city controls the price. So costs went through the roof, but the income, the rent, was held flat.
And when costs go up but income doesn't, profit vanishes.
It vanishes. And here's the kicker. Mayor Mamdani actually tried to stop this sale. He said the new buyer couldn't afford repairs.
Which feels a little ironic, doesn't it? The reason the buildings are falling apart is because the city's own policies made it impossible to pay for repairs in the first place.
That's the irony. The mayor is blocking the consequences of policies he supports. The reality check here is that you just can't regulate prices without breaking the market.
And the market is reacting. I saw a stat that 73% of investors are planning to cut back in these markets.
It's capital flight. If investors can't make the math work in New York, they take their money elsewhere. And if they flee, who fixes the roof?
No one.
No one. And that's the warning sign.
So let's pivot from that story to the bigger picture, because this ties right into Mayor Mamdani's biggest pledge. A rent freeze.
The rent freeze. Sounds great on a bumper sticker, but we have to look at what one of our sources, Vital City, called the broken link.
Right. The idea that the Rent Guidelines Board was supposed to be like a utility regulator.
Exactly. Your electric bill goes up when fuel costs rise, right? It keeps the lights on. That was the design here, to link rent adjustments to operating costs.
But that link is broken.
Totally broken. For 10 years, rent increases were kept way below inflation. We've been starving the buildings.
And the result is that buildings are now underwater. The data shows about 10% of regulated buildings are financially distressed.
And distressed is just a nice way of saying they're falling apart. It's deferred maintenance. It's the maggots and urine we saw in the Pinnacle case.
It's a death spiral. But here's the part that really scared me. If these landlords go bust, who gets the building?
The city does, through foreclosure.
Okay, so the city becomes the landlord. What does that actually cost us, the taxpayers?
It's shockingly expensive. To fix years of neglect, the estimates are between $250,000 and $500,000 per unit.
Wait, $500,000 for one apartment?
For one apartment.
That's insane.
It's the hidden taxpayer burden. You freeze rents, you bankrupt the buildings, and the city inherits a massive bill. As James Whelan from RBNY put it, the math doesn't work.
The math doesn't work. I think that's the theme of our deep dive today.
I think so. You can pass a law freezing rent, but you can't pass a law that says boilers don't break.
Okay, so that's the housing stock. Now let's look at the other side, helping people pay. We have to talk about the vouchers, the CityFHEPS program.
Right. And if you think the rent freeze math is scary, the voucher budget is where the numbers get truly wild.
So what are we spending right now?
Well, the budget has jumped fivefold since 2021. It hit $1.25 billion last year. The comptroller thinks that it could be $2 billion by 2026.
A five-fold increase. But the mayor and city council want to expand it even more, right?
That's right. They want to open it up to people who are just at risk of eviction. It's what experts call the woodwork effect.
More people become eligible, so more people apply.
Exactly. And the comptroller's office estimates this expansion could add between $6 billion and $20 billion to the cost over 5 years.
20 billion with a B. Where does that money even come from?
It has to come from taxes. There's no magic pot of gold. Now, advocates argue that vouchers are cheaper than shelters.
And they are, right, on a per-person basis.
They are, but that ignores the transition cost trap. You have to pay for the vouchers, but you also have to keep paying for the shelters until that population drops.
It's like paying rent on 2 apartments at once.
Exactly. And the shelter population isn't dropping, it's rising. So the city is paying double. We're looking at a massive deficit, a fiscal ticking time bomb.
Okay, let's move from the budget to what people see every day. The streets, the encampments.
Yeah, this is where the rubber meets the road.
Mayor Mamdani has pledged to end the sweeps of homeless encampments. He wants a softer approach. But we have a CBS News report that paints a pretty intense picture.
It does. They went to the Upper West Side and Hell's Kitchen. And you see people living on the sidewalks in the cold. It's a real sense of disorder.
There was a quote from a resident lived there 3 decades who said the neighborhood has gone back to old school ways of crime.
That phrase, old school, really hits hard. It sounds like the bad old days. The mayor's argument is that sweeps are inhumane.
But residents are calling 311 and saying nothing happens. The encampment is still there.
And this is about to get even more complicated because of what's happening in Washington.
The federal twist.
Right. The new Trump administration's HUD is changing the rules. They're shifting money away from the housing first model Mamdani likes.
Housing first being just give someone an apartment, no strings attached.
Right. The new rules prioritize short-term shelters that have work requirements.
So what does that mean for New York?
It means we could lose a huge chunk of funding, potentially dropping from $170 million in federal aid down to just $52 million.
Ouch. That is a massive cut.
So the mayor is relaxing enforcement on the streets at the exact moment the federal government is tightening the purse strings. He's losing the enforcement tool and the funding tool at the same time.
Which leaves you with
disorder. And no resources to deal with it.
It feels like every path is blocked. The buildings are going broke, the vouchers are too expensive, the federal money is drying up. So why not just build more housing?
Simple economics, right. But again, we run into the math problem.
The vacancy rate is at a historic low. What is it?
1.4%. That's effectively zero. A healthy market is closer to 5.
So developers should be falling over themselves to build. Why aren't they?
It comes down to a tax incentive program, 485X. To make building a rental profitable in New York with its high taxes, developers need a tax break.
Okay, so the state created one. Why isn't it working?
Because they attached strings. Specifically, rules about construction labor wages that drive the costs so high that even with the tax break, the building loses money.
So it's unprofitable before they even break ground.
Exactly. So developers just won't build. They'll take their money to Florida or Texas instead.
So the mayor's goal of building 200,000 units is?
It's a fantasy. You can't mandate supply into existence if the math doesn't work for the people pouring the concrete.
So let's try to sum this up. We have a mayor promising rent freezes, no sweeps, and more vouchers.
That's the promise. But the price tag is a potential $20 billion bill. It's bankrupt landlords. It's deteriorating street conditions.
It feels like we're just ignoring the basic laws of economics.
That is the core critique here. You can't regulate your way to prosperity. When you ignore the math, whether it's on a building's balance sheet or the city's budget, eventually the bill comes due.
And right now, that bill looks like it's going to be incredibly heavy for New York taxpayers.
It is. And the people who get hurt most are the tenants in those crumbling buildings and the everyday New Yorker watching their neighborhoods slide backward.
Mayor Mamdani says housing is a human right. A powerful statement. But looking at all this, insurers fleeing, budgets exploding, I think we have to leave you with a harder question.
The real question is, can New York City actually afford his ideology?
Something to think about. Thanks for joining us. We'll catch you next time.